Hi, I'm Stuart Elliott, the editor-in-chief of The Real Deal, here with another installment of TRD Tips. Today I'm here with Rob Verrone, the owner of Iron Hound Management. Rob knows his way around a loan, so much so that he's known in the real estate industry as Big Loan Verrone. And as a commercial real estate broker, he's helped arrange and negotiate more than billions of dollars in debt since he launched his company. So, a lot of building owners have sought his help in borrowing money to buy their buildings, but today some of those same owners might find themselves in a tough spot during COVID, having trouble paying their mortgage. So we wanted to talk to Rob about their options and what the landscape looks like for landlords today, from mom and pop building owners to giant companies. So thanks for joining us, Rob.
Thank you for having me.
So say you're a small building owner and suddenly, your rental tenants stop paying rent on their apartments, or the store owner on the bottom floor goes out of business and can't pay their rent. So maybe you don't have enough money to pay the mortgage, on your building. What happens next?
Listen, the short answer is you go to your ATM machine, you put in your code, and you get some cash, and you pay your lender. That's always the easiest solution. However, that question's a tough question because it takes in a lot of variables that you should think about. When did you do the loan? What type of loan is it? Is it recourse? Is it non-recourse? Did you cash out money at the time you did the loan? Do you have a tax issue? And lastly, have you been getting cash flow from the property for the last 2 years, 3 years, 4 years, and now you have one bad month or two bad months, and you don't want to theoretically go to your ATM and pay it. So, the first thing you have to do is figure out your options and figure out what kind of leverage you may or may not have. Most borrowers think they have a lot more leverage than they actually do.
And so, say you miss one payment, say you miss three. I think one thing that's happening now is, deferments. What is that? What does it look like? And are you seeing more of that during COVID?
Yeah, sure. I think when COVID first started, we were doing what I've mentioned as kind of root canals on loans. We would figure out a way to jury rig the existing returns to make sure we're able to pay debt service. Maybe the sponsor brought a few dollars to the table also. However, now as the issues continue, you really have to go in and do something much deeper than root canal. You may have to do open heart surgery on these loans, and that requires a long process. And typically, what you do is you bring some cash to the table, and you hope that the lender will either forgive or defer some payments for a while and allow this mess to clear up.
Mm-hmm. So the deferments basically work where you'll skip a month of paying, but they'll add that total onto the end of the loan. Your loan will go a little bit longer, right?
I don't think anyone's doing anything for a month. Again, if you have a CMBS loan, specifically, you have a lot of fees associated with any workouts you do. So to go to your lender and just ask for relief for a month, you really are better off finding a way to borrow the money from relatives or something. Balance sheet loans are a little different, but again, I think most lenders don't view that they should help a borrower for 1 month. If you're going to go for help, you need a much longer amount of time.
What is a typical deferment period for, let's say, we'll talk mom and pop landlord? And obviously, I know there's so many variables.
So I think right now what we're doing is we're seeing 6 to 12 months. But it's very important, Stuart, that you realize it's not a forgiveness of interest, right? We're not at the point where lenders are forgiving interest. They are requiring that interest to get paid back. And they're also requiring you to bring something to the table. They're not just saying, hey, you know what, times are bad, don't worry about paying me for a while. You have to act like equity. You have to bring something to the table.
Right. Is there any government assistance that can help with all this during COVID, or that landlords and building owners are taking advantage of?
I think it's called the PPP. A lot of people are getting the PPP loans and getting permission from their lenders to actually take that money. And that's probably the only government assistance I have seen so far.
And that's typically in the case where you actually have to have employees, right? So if you're a really small building owner with part-time staff, you probably wouldn't qualify. But if you're any sizable,
it would be tougher. Yeah.
Got it. So, say you're doing the deferment and, you reach the end of that period, if that's a possibility for you, What we got into this for a second, what other kind of, workout options, as they call them, are, in the cards? Like how did that kind of work?
Again, everything from an A/B note where you take the mortgage and you split it in half and you put some new equity in and you create a hope note for you and the lender on the back end. We've done delayed DPOs where we agree to bring a bunch of money to the table today, and in exchange for that, the lender agrees to sell me my loan back 2 or 3 years from now at a discount. We've done just pure interest waivers and interest forgiveness. But again, all that requires us to bring something to the table. We've done 50 plus billion of workouts. I don't think we've ever done one workout where the sponsor hasn't contributed significant equity on a percentage basis.
And what are you seeing with building owners right now in terms of getting that additional equity they can bring in? Is it a decent environment for that, or how is that kind of working out in general?
Yeah, I think most of the people we deal with have their own ability to fund their own problems. They're not looking for rescue equity or any third-party equity to come in and solve the problem. When you bring a third party into a deal, it becomes a little more difficult. So we've been very fortunate that our sponsors are substantial and they have the ability right now to support their properties. But it's getting tougher.
Yeah. Which leads me to my next question. Say things go south and the workout's not working. Special servicing is the next area you go into, as far as then you're on a path to bankruptcy or foreclosure, right?
That's a tough question to answer. Again, special servicing is only on a CMBS loan, right? That is a CMBS way of servicing. A balance sheet group doesn't have a special servicer. So if you borrowed from Wells Fargo's balance sheet, but if you miss enough payments, your loan's going to get accelerated. It's going to be publicized in the Real Deal. You guys will write about it. And legal papers will start going back and forth. However, it's tough to foreclose right now in New York City, especially because of the pandemic. So you have some time to try to figure it out.
Yeah, and what is that timeline like for the workout period to giving back the keys to a bank?
So our average workout takes 9 to 12 months, and again, that was in 2008. And that's today. I mean, workouts take forever. There are some lenders that definitely do them a little quicker, but for the most part, it's a long, drawn-out process. If you're not able to get a workout, then the foreclosure happens and the lawyers take over. And that's, again, in a state like New York, that's a 12 to 24-month process.
So, big question, how much more pain for building owners do you see coming down the pike? I mean, how many successful workouts relative to handing back the keys to lenders do you foresee coming down in the next, 12 months?
I think we try to pick our clients very well. I mean, we probably spend way more time talking to our clients before we take an assignment, and we say no to a lot more. So I think, talking my own book, I think most of the deals we work on, we ultimately get a workout done because we've advised the client on what may need to happen. But listen, lenders are optimists right now. They believe there's a vaccine that's going to open up New York City, get tourists traveling, get business traveling going, get people on the streets. So they would rather give a little bit of time, as long as you contribute, than taking back your property. But if this continues much longer, foreclosures are going to continue to accelerate.
Right. Well, it's an interesting scenario. We'll see if there's light at the end of the tunnel, and if it's a complicated situation for some building owners. I know that. Thanks for walking us through the process, Rob. I appreciate it.
No problem. Have a good day.